times where secondary indicators are most useful to me are when you've been in a prevailing trend for a while, you notice a subtle character change, and your experience tells you, hey, this trend might be ending. I'm noticing a change here. When you don't have the guts to act on that feeling, you can look to a lot of these secondary indicators to give you the conviction that you need to then respond to what you're seeing. Mm-hmm. And this final point on the precision, everybody knows the last couple of months really in this market have been very choppy, very difficult. And you know, if you're just going by price and volume alone, the volatility can make it kind of tough to time things right. So these secondary indicators can help you in some of those cases as well. So let's take a look at a few of these. We're going to start with the sort of general market indicators. We'll start with some easy ones before we get to some of the more complex ones. And these are the four we're going to look at. These are used primarily to gauge market strength and direction. So to take a look at these, we're going to pull up MarketSmith once again. I'm just going to clean this up, turn off my markups here, and let's pull up the Nasdaq. And you know, it should be pretty obvious to everyone at this point that we're in a pretty decent uptrend. You know, we're up here close to the highs. We just made new highs, and things are looking pretty good, right? Pretty good. So to kind of take a look at what the secondary indicators have to say, we're going to pull up the list panel down here at the bottom of the tool. We're going to come into the markets and industry groups folder, and all of the market indicators that we're going to look at right now are in this market indices list. If we scroll all the way down here at the bottom, you'll see them. You've got daily market indicators as well as the daily market averages. So the first one we're going to talk about is the advanced decline line. That can be found right here on the daily market average Nasdaq chart. So this is pretty cool. You've got the American Exchange plotted at the top. You've got the Nasdaq in the middle, and then at the very bottom you've got the Nasdaq advanced decline line. What this line is showing is the total number of advancing shares versus the number of declining shares. So on a day-to-day basis, this is giving you a sense of breadth. You know, how many stocks are really participating in this move, in this rally that we're having. You could have a day where you're up in price, but the advanced decline line might be lagging because there are just not that many stocks that are pushing the market higher. It might be only a few stocks. So this is a great way to confirm the breadth of the rally that you're seeing. And right now, you know, the market's at a new high, and so is the advanced decline line. So it's not outstanding. It's not just screaming up there, but it's pretty healthy, right? It's confirming that you've got a nice breadth to this rally. So there's plenty of stocks participating.
Yeah, and I'll add one thing here with using this advanced decline line. A lot of times, the advanced decline line will start peaking before the actual index, and the reason why that happens is you have a broad market rally, but now more and more stocks or more and more companies are starting to have trouble. They start falling apart, so their stocks start selling off. So the rally becomes more narrow. And so it's captured in that advanced decline line, but you still have a smaller set of leadership, which sometimes they can take the markets to higher grounds at that point, but the advanced decline line is not confirming it at that time.
Yeah, great point. If you look back to the correction that started in April of last year, notice you had the market was making new highs, the Nasdaq was making new highs, and the advanced decline line was lagging quite a bit. So just showing that the number of stocks participating as that rally got older, it was kind of getting less and less. A lot of leaders were topping and that sort of thing. And this would have been a good thing to kind of key in on as that distribution day count was getting up there. This is kind of like another signal telling you that something's wrong, there's a character shift in the market. Another thing I like to look at in conjunction with this is on this daily market indicators page, again for Nasdaq. At the very top, you get the actual number of advancing issues versus declining issues. So on a day-to-day basis, you can check this and say, yes, the Nasdaq might be up 2% today, but how many stocks, right? Is it the majority of stocks or is it the minority of stocks? Can give you a nice little edge when you're trying to detect the breadth of a certain move. Now let's take a look at some of the other indicators on this page, because there are some great ones on here. The next one below that is the short-term overbought, oversold oscillator. And this one's kind of interesting as well. These next three that we're going to cover, the short-term overbought, oversold, the 10-day moving average up and down, and the 10-day moving average for new highs and new lows, these all are kind of pointing out when the market is getting a lot of momentum in one direction, and there's kind of a risk of it reverting back to the mean or the average. This short-term overbought, oversold oscillator is really just a 10-day average of the number of stocks that are up in price minus the stocks that are down in price. So when you've got a few days in a row where a lot of stocks are up in price and there's not a whole lot of selling going on, you see this blue line start to creep up towards the highs here. And notice, when you've become extended over a certain period and you reach a certain level, there's a tendency to revert back to the mean, which is this red line here. So people use this as kind of a sort of a contrarian indicator, right? When you've got you're overbought or too oversold, the tendency is to come back. So when you reach these highs here or when you reach these lows here, people look for a change in direction, at least in the very, very short term. So it's just a 10-day moving average. So, again, we don't use this too much for detecting the big trends or the big changes in trends, although I guess it could be helpful for that. But for me, I think the better use for this has been over the last few weeks and months when you've got some volatility and you're trying to time your entries. You get breakouts here and there, but when exactly to enter a market can be very difficult, especially over the last few months. So this can be something that maybe you can use to detect, how extended are we, how are we due for a pullback.
Yeah, and just to add on that, I've always found a lot of these indicators, and I think this one does a good job of it too, of just trying to capture that fear. That's when everyone's throwing in the towel. And so when you start seeing, for instance, down over here, when this is getting near a new low at this point, at least that's just giving me an indicator that, okay, maybe more people are throwing the towels at this time, and everyone who wanted to sell is selling at this point.